Hi, good morning. Here is a brief rundown on Dangote Cement H1 2025 earnings. These numbers dropped, I believe, Friday evening, last week Friday evening after market hours. So I just thought to run through them. Now, I've posted my watch list for the week video. So if you are watching on YouTube or LinkedIn, if you scroll through my timeline on LinkedIn, you'd find the video, I think. Or you'd find the pictorial. If on YouTube, great. It's the last video I did just before this. I also have some I'll be expanding to some other country by next month, and that will be on a weekly basis. So Monday morning by this time, I'd looking at the stock market of another country. And let me know what country you think. Drop in the comment sections. So, anyways, let's get right into this. As first, with my disclaimer, this is not investment or trading advice. Do your own research. All I share is what I find interesting and my own research. You cannot base your own investment decisions on my own research. That's incongruous. So the disclaimer is very, very key. So let's start with H1 25 versus H1 24. H1, as always, first 6 months of a company's financial year. In this case, we're looking at the first 6 months of 2025 and comparing to the first 6 months of 2024. So what do we have? Revenues up by what? 1.17%. And just in case you're wondering, I should have included this. Is there a way I can minimize this as well so it's easy to get? Maybe I can add the text box just to as a subheading. So as we do in finance, I would say all figures naira and then -000. So let me move this up. Okay. So all figures 00, what does that mean? Um, it means that you add three zeros to every figure you see. So all the numbers you see here, add three zeros to it. Now, simply put, what that means is that revenue was 2 trillion for H1 25, up 17%. Profit for the year was 520 billion, or profit for the period rather, not the year. Year ends in the December. Profit for the 6 months period was 520.4 billion, up over 174%. And this is a trend that you've seen. I think I covered the video on Lafarge Africa sometime last week, so you can also check that out as well. Now, you can see I brought out the margins. Margins for me are very key. And I know people grumble a lot about profit margins, cement margins. That's a common complaint critics of the Dangote cement space and the cement space generally say. But I mean, I don't think that these margins are that bad because, or I don't think the margins are excessive. You're looking at profit margins of 25%, meaning on every 100 naira, they're making 25 naira as profit. I don't think that's excessive. Maybe you can argue cement prices could come down a bit, but I mean, when you look at the fact that, and there are pros and cons for each, as an analyst, I would say I don't think cement prices, these margins are too expensive. Could cement prices come down maybe a bit more, but you have to help them lower their generating costs and operating costs and the likes. And you can see production costs. Interestingly, production costs are flat um, year on year, which I mean in a high inflation environment like Nigeria and just generally Africa, because Dangote Cement operates across Africa. So it's quite nice to see. I think that shows the way management has been prudent. That you have your production costs kind of fairly fairly low, just up what 2%, admin cost up higher 25%, sales and distribution cost up 5%. So I think they've done a decent job of managing cost. Finance costs are down, which is great, and all that. So all in all, I think been a pretty decent 6 months for the firm. Now let's go to volume splits. And when I was looking at the numbers initially, I was wondering what drove the increase in profit. Was it higher production volumes, meaning I'm producing more, or was it an increase in cost? And so, for what you can see here, and I've extracted the volume numbers, you have production capacity. So clearly, production capacity, you did have an increase in production capacity in Nigeria. Some people would argue the cement space in Nigeria, you have what? I mean, you probably have overcapacity. Even though the cement players will tell you you have to have some large capacity. So when if there's a spike in demand or something comes up, then you can accommodate it. But if I'm looking at the capacity utilization here, if you're producing what 6.5, you have a capacity of 25, 29. That's 30. That's probably 20% capacity utilization or so. 6.5 divided by 29.2. 10% of 29.2 is roughly 3. So you just have maybe what 20 something percent capacity utilization. I don't think that's the most efficient, but well, I'm not a manufacturer. Manufacturers may take the opposite side. So clearly you can see that for the Nigerian unit, sales volume, production volumes went up marginally. Sales volumes dropped slightly. I wonder why. I am sure that there will be an earnings call sometime this week. If I'm chance, I'll pop into the call to listen to it, just to figure out um, what's leading to what led to the slight dip in sales volume. But it's not too bad. Now, the Pan African numbers that you're seeing, Pan African numbers include Nigerian numbers. The ideal thing for me to do is to say, subtract Pan African Nigerian numbers from Pan African, you get African numbers. But I'm a bit pressed for time. It's Monday morning. I have a couple of other engagements as well. So maybe later this evening, maybe later in the week, I'll probably tweak and amend to include it. And while I put up a post on the Green Ticker website, I'm overdue that as well. Another thing one could also do is to put Q1 and Q2, and I probably would do that on the Green Ticker website when the article goes up. So that's just one thing to know. But for just my rudimentary looking at it, if sales volumes in Nigeria, I mean, you can do the numbers. If you want to work out Pan African volumes, 13.9 minus 8.9. So H1 last year, Pan African volumes were about what, maybe 5 point something trillion tons. And then if you subtract 13.3 from 8.9, you get 4.3.5, or I don't know. But if you do the numbers clearly, and if you're an Excel person, you can just throw all these numbers on Excel and do it. What I see here, it seems like you had the dip in Pan African volumes, but I'll probably play around the numbers and maybe share on my Twitter page. So, but clearly you can see from the Nigerian end that the increase in revenue was driven by higher price. Because if your sales volumes are essentially down and your revenue is up, then it's either you're more efficient, or you probably took a price increase, or a bit of both. So yeah. Now my view, as always, is I think this stock is a buy. Only challenge is that it's a very illiquid stock, and maybe I can go online to explain what illiquid means. This stock barely trades 10,000 shares. So if you're a small investor who's buying maybe what 200, 300, 500, 1,000 shares, then it's not really a big deal. But on the other hand, if you are a big time investor, this is not a stock that you trade because it's not liquid. So it's more of a long term, stay there for a couple of years kind of thing. So I have a target price of what, 607 naira. current price is 493. This video will be up before trading hours in Nigeria and all that. I have a 10x target, the multiple. I'm using a 10x multiple because, as you can see at the bottom, 5-year earnings CAGR is 15.9%, meaning the last 5 years net profit has essentially grown 15%. Revenue has grown at a higher cost multiple rather. So 5-year on average growth rate in revenue has been 34%, which isn't too bad. So I have a 10x multiple, and that gives me maybe potential upside of 23.2%. Now, dividend wise, dividend yields, the firm has a history of paying 90 to 100% of its dividends. In fact, last year, it actually paid at 108% because you can see they made 29.7 naira in earnings per share last year, paid the 30 naira dividends. That's 100%. Just to be conservative, I think this year they probably maybe will pay out 90%. It's possible they might do a bit more, they do a bit less, but I think at current price, that's a dividend yield of 10.1%, which isn't bad in my view. I'm sure you can argue that if you check the banking space, you have firms that probably will give you a higher dividend yield. But my own cutoff point is that I think for dividend yield, at bare minimum, if you can do 10%, that's good for me. Because if you look at what savings accounts are doing, basically your regular everyday, I'm not talking your high yield savings accounts. Regular savings accounts are probably doing 5, 6, something percent per annum. So if you do twice or do more than that, then you're good. And in any case, interest rates possibly might come down sometime this year. So you might have a dip or a reduction in what your savings accounts are paying. So all in all, I think these numbers are pretty good. Sometime within the week, maybe this evening actually, I probably would have a podcast episode out on Spotify. I had promised on Spotify that I was going to do an episode on a couple of US stocks before Nigeria, and I would do that. I'm considering Tesla as well. So once I do that, I then go back to Nigeria. So from maybe this evening or Tuesday, you'd have a chunk of earnings out and all that. So do let me know what you think. More content, Green Ticker Tales website, Spotify, podcast on Spotify, Apple, YouTube Music. All the links are in my bio on YouTube. If you are watching on LinkedIn, all the links are in my Linktree bio. And I think maybe what I need to do is to just post all my links, post all of them once a week, drop it as a post across all my platforms as well. Any questions, you can drop in the comment section, send an email to info@greenticketdeals.com. Thank you. See you in the next video.